Good evening, everyone. Give me a couple minutes or a minute, and I'm going to share out this link on the Discord and Twitter and Telegram. Just got to share this in Telegram, and then we can get started. Sorry about that, Gerard. Yeah, this probably isn't a great time for the EU. All right. So let's get started, and we'll start with ETH. Could be noted that there are some local bearish divergences forming on ETH, and we have kind of a key local level here. I have my longs from much lower, but might be interested in scalping a short if we see some weakness here. But my ideal setup would actually be to come up and sweep this high and see weakness. But we'll see how PA plays out here. We might end up getting both. But I won't be closing my longs. I'm certainly willing to look for head shorts here. I'm not particularly bearish on ETH, frankly. But I understand that there's only a couple levels here that are worthwhile to look for shorts. And I've been fortunate to fade a lot of the shorts on ETH and really just longing the pullbacks and not shorting here, faded a short here. So just been holding that long. Because the ideal scenario really, if you're looking at a potential short on a key level like this, is there's no reaction, right? So I was waiting as price was consolidating under it, saying, hey, you know what? If we come up and sweep the high and reject, I will take a short to hedge out my longs at resistance. But we just broke straight through, so no short trigger. Very easy to avoid that short. And the same goes here. I'm willing to look for head shorts, but if the setup isn't clear, I'm not going to take it, and hopefully can fade that. But yeah, if we break out of this high, I think it's worth just noting that, yes, there are technical resistances with fibs and so on, but the structural resistance on the chart and the price action is almost non-existent. So, if we don't reject here and we claim this, it's not crazy to imagine a scenario where we retrace this entire move up into the $3,500 region. I think the 786 is right above that high. Oh no, it's the golden pocket. Yeah, so something like that would actually be an amazing short setup. And by amazing, I just mean very technical, very clear in validation. And I don't discount the idea of us pushing up into this region. But really, this is the only high time frame idea for me left to short. There might be some scalp entries based on progressing local price action. But, definitely not in a hurry to close out my longs, but willing to take those hedges. All right. There's just something I'll answer really quick. I'm just glancing at the comments. Somebody says, the millionaires and billionaires that move price, do you think they care about technical analysis? I have a different view on technical analysis than many might have. And I think properly deployed technical analysis is taking into consideration liquidity ideas. And so it's not so much that the market makers, the millionaires, the billionaires that move price care about technical analysis, but they care about liquidity because they can't fill positions or unload positions without liquidity. And so properly deployed, I guess, next level TA is taking into consideration those liquidity ideas. And when you talk about fibs and all these different kind of ideas that price likes to interact with, my belief is that, again, when properly deployed, oftentimes fibs are confluent with the strongest liquidity ideas. I think the reason price moves between things like fibs so consistently is those levels, those retracements, those impulses, they're directly linked to people's emotional triggers. You'll often see the highest volume coming in right at a key fib. I don't think that's necessarily a coincidence. I don't think it's a coincidence that you'll see the most longs relative to this price action, right? And you'll see this big peak of volume right at the golden pocket. All these longs stopped out. It's not that market makers care about this fib. They care about the liquidity that is placed here. And people tend to place their stops right around these key levels over and over again. People tend to get very bearish and start breakdown shorting. So anyways, that's my view on technical analysis. But I'm going to keep an eye on ETH here for a second because I'm in a long that I'm in a series of longs. I've longed pretty well every pullback. I longed here, I longed here, I longed here. I've been longing all of these pullbacks. And so, we're at major targets. So I need to make decisions on whether I'm going to be hedging or taking profits on ETH. Bitcoin, obviously, seeing a breakout as well. That's worth considering. Doesn't look particularly weak. I noted on Twitter that, because I had this idea of shorting this swing failure, got this nice retest, but as we wicked down through this the low of the range, we had high volume. We actually had a ton of shorts opening here as well. People trying to short that breakdown. I noted on Twitter that while we're holding this range, there's no reason to suspect we won't either continue ranging or just break out. It's a sign of strength that instead of this happening, that this happens and we hold up this local range, and there's no reason, and we had bullish absorption and order flow, no reason to suspect that we can't push back up into this liquidity or potentially break out. The level overhead on ETH, and I do have Bitcoin longs as well. Sorry, the level overhead on Bitcoin of interest is, of course, these highs, right? These highs are going to be a major liquidity target. Lots of people wanting to long the breakout there, short the, have their stops on shorts above there. That's kind of a trader SC short invalidation, I think. So, you can always come up, grab that liquidity, then reject back into the range. Or, which might shock people if it happens, you just break out. And again, not a lot of structural resistance, much like ETH. if we do break out and claim those levels up to 50K. And so, you know, I know that seems crazy to people, or many people, this idea that we could come up and impulse up into through these highs, sweeping that liquidity. Obviously, people are going to FOMO like crazy if we take that high right into fib resistance. You have a rejection. That could be a very nice short setup as well. Maybe even just come back down and retest this level. I'll draw that as a, this is just a high time frame idea. Right into the golden pocket retracement. Something like that would interest me a lot. Shorting this 50K region. And it can seem silly to talk about these levels now, but just preparing. You know, we know we're at critical levels here. Personally, I don't think there's a lot of resistance here. If we claim these levels, this move can get retraced very quickly. And we can imagine where our fibs would align back into these key horizontals. Come back, retest them. And you can see continuation or a range. So this would be a high time frame long idea after this high time frame short idea. But we still have some resistance to clear before that becomes relevant. So for me, just trading levels patiently, reasonably, always using risk management. I'm not in a huge hurry to short ETH, like I've said. You know, I've been pointing out for many weeks. Order flow has just been accumulating bullish divergence after bullish divergence. Every pullback getting absorbed. There's been a lot of aggressive selling on ETH over the last weeks. I presume because of the Shanghai update. That hasn't dissuaded me from going long because that's not really something I factor in with my trading style and system. You know, you can get kind of caught up. Certainly there's a potential of rejecting back into this range, but you know, right now we're impulsing and kind of forming a range, chopping around. Personally, this is for me thin air. I'm not interested in shorting. I'm sure there's going to be, at the very least, scalp opportunities here. You expect volatility, but a sign of weakness on Bitcoin for me would be to deviate back into this range. Particularly if we can start forming bearish absorption in the buying pressure. But while we have this clean break, not interested in shorting as of now. ARB, just with a crazy breakout. I had an idea too of shorting ARB because I actually did long ARB down here, and the idea was as we were coming down on here on the daily chart, it's kind of clear towards the 786, sweeping this daily low. I thought it looked like a nice setup, and potentially shorting here, but much like ETH, the idea was to short if we. I'll go to the 1 hour just to make it more clear. If we could come up and sweep this high into the 786 and then reject back under it, that could be a short trigger for me. But of course, we just broke straight through the level, no weakness, and so no sense in trying to short that. I also think there's a nice setup on Sol. I'll cover a couple of the charts I have open. If we can come back up and sweep this high. So as we've been approaching this high, obviously has had a massive bullish impulse here. Lots of discussion in the Discord between members about Sol. My thoughts are that it seems likely that we come up and sweep this high at least, and that's a short setup I'm interested in if we reject with a stop above that new high. But not a lot of structural resistance here, so certainly patient about shorting. This is the ETH BTC daily chart. Very strong impulse off this level. This is one of the reasons too that I've been longing ETH. I talked about this in the Discord too and on a live stream. This really nice clear tap of this trend line into the this golden pocket fib on the daily chart, and a nice sweep of these lows, which could generate a nice impulse, which we have gotten. Certainly was still bullish here too as we impulse, but we came down, retraced that move. Because ETH has been, of course, the last week a little weaker against Bitcoin, right? That hasn't shaken me from my bullish thesis, but for me, I still only long pullbacks to support. So you'll never find me longing up here. I'm always patient, waiting for pullbacks, making sure to position myself for a potential move with risk management and validation. And so happy to have caught this big move on ETH. So I'll answer a couple questions here. I'm going to go back and answer. Somebody asked, how far can we go down on ETH and Bitcoin? So that's just not something that I think about. I don't think about how, because you don't know, right? You really want to see how price is reacting at key levels, taking reasonable trades if you're trading at all. How far can we go down? We can go down to 2K. But you get more information when you see how price is reacting at key levels, right? For example, I could have imagined a scenario where we reject here and we have a deeper rejection. But as you see price wick up and reclaim this range, well, all of a sudden you think, there's no reason to suspect we're going to break down here. We're holding this range. We have bullish absorption, lots of shorts to squeeze out. So you kind of temper your expectations, and you can really, I think it's best to adjust your bias as you see how price is interacting with key levels. So another question is, I do want to note, we're getting some reaction here. ETH likes the 786 locally and on high time frames. Big bearish absorption as well. So actually, I'll probably try a short here, always using risk management with the stop above the high, probably a TP1 here. And, I'm happy to do that. I have to protect my longs to some extent. Now, the target is much lower, but if we get a reaction, much like on Bitcoin, and we sweep this low and reclaim it, then I've got to take profits, especially if there's bullish absorption. I'm actually going to share in Discord really quick. Shorting. It's also reasonable to bring this stop in a little bit. So let me switch over to, now anything can happen. It's important to use risk management. I'm really hedging my longs here. But I'm going to show the order flow in a second. I talked about this idea already earlier, that this would be a short trigger for me in the Discord. If we, here, let me show you guys. If we pushed up into a retracement here, 786 is quite nice, as well as the golden pocket. And we fail to take these highs, and we start seeing a reaction, and we have big bearish absorption. So how this works on, let me show you the open interest as well. How this works on CVD is, what this is telling you is that there's aggressive market buying, which can be shorts closing. and it can be longs opening. In this case, there's a lot of shorts opening, or sorry, shorts getting stopped out here. But there's a lot of aggressive market buying pressure coming into the market. You can see CVDs making higher highs, but price is being suppressed by bigger traders holding price down with limit orders. So we're just worth noting this does not work the same as RSI and other indicators with divergences. But so what we're seeing is price is making a lower high, CVD is making a higher high. We can see some of this buying pressure being absorbed. So it's not to say what will happen. It just makes the probabilities of a retracement here more likely. And it's something I use as confluence for shorts. There's certainly a nice tight invalidation here. Of course, I might be willing to reopen the short if we come up and we sweep these highs. But for now, with the bearish absorption, I'm willing to take it a little earlier. Yeah, Gerard's asking if I'd be willing to add to my long if we sweep this low. You know what? It could be a nice scalp, certainly. But I wouldn't mind waiting for some higher time frame ideas on ETH. But yeah, if we have big bullish absorption here, a sweep at these lows certainly can make sense. Sorry, somebody asked, do you see Bitcoin doing any sort of pullback here for those of us who are sidelined? So you're not going to, I'm going to answer this question just the way I view the market, is if I was sidelined, you know, it's not really a matter of if I think Bitcoin's going to get a pullback, and I would never make a decision based off of that because I don't know what's going to happen. If I get a nice pullback to support, then and I have a lot of trade confluences, I'll take a long. If I don't and I miss a trade, then I won't. But you know, I've positioned myself long on pullbacks on Bitcoin and ETH, and now that price is breaking out, I don't have to really. There's no FOMO for me. I'm willing just to let price action play out. And if I get some nice pullbacks to support, maybe retrace into these levels, then and a nice reaction, then I'm willing to take a long. But yeah. So I guess the idea is I don't even think about, do I think it's possible? Do I think it will? Because I don't know. Anything's possible. It's just a matter of if this happens, then I'll do this. So if we get a nice reaction from resistance, I'll take a short. If we get a nice reaction from support, then I'll take a long. Eventually, either of those two things will happen. And I'm never sitting here thinking, even if I wasn't in any longs on Bitcoin, thinking, I've missed all these longs. I don't think we're going to get a pullback, so I'll just long here. I'm always planning and preparing, being very diligent, doing a lot of work, and putting myself in a position to catch these moves. So I guess the answer is I don't know, but certainly typically price likes to range and pull back to support, whether it's a minor pullback like this, like some of these minor pullbacks, or deeper retracements where you can find nice positions with nice invalidation. So yeah. One thing I'll note, so ARB's swing failure this high. That's interesting. So you see that nice reaction off that sweep. One thing I want to note too is, for me, if I'm trading you want to be careful trading too many things at once in a correlated market. So like if you're shorting Bitcoin, shorting ETH, shorting ARB, shorting Sol, shorting all this stuff at once, because this market likes to move together, you need to be very careful about your risk profile. And for me, although I would be interested in this short here, especially when I'm live streaming, I like to be very focused on what I'm doing and how I'm executing before when I'm trading lots of things, and make sure my size is appropriate. But But yeah, I think this is an important level to have swept. It's certainly important to consider that we're rejecting here on ARB. By the way, none of my trades here are signals. I'm not suggesting that anybody take these trades. I'm simply explaining what I'm doing and why, how I view the market. You know, I have my own stable of positions that I'm managing. But if you want to learn more about this stuff and get kind of a daily perspective on the market and see these concepts implemented regularly, that's what the Lucky Apes Trading Floor is all about. Link in the description. It's an amazing community. It's been really edifying and rewarding to see the progress that so many traders have made. Many capping their first profitable months, and yeah, it's awesome. I will say it's not a signals group. Although yes, I share my setups and I share my ideas. The focus is on helping members understand the what and the why of the process, right? It's not just short 2130 with a stop at X. There's educational materials on all these concepts, and all I'm doing is deploying those concepts on a daily basis to increase people's understanding. Brain says, LATF will make you a better trader and a better person. Yeah, there's lots of personal growth that comes along with trading as well. Trading is a difficult endeavor. So, you know, it's not just a matter of technical analysis and taking trades. There's a lot of emotional challenges to overcome, psychological challenges. Yeah, the girl who asked about if I think there'll be opportunities for those sidelines says, thank you, we'll let PA play out and make decisions at another opportunity. Yeah, my approach with the market is I mark out levels, I set alerts, and I say, you know, if we get a pullback to here, I'm interested in a long. If we get a push up to here, I'm interested in a short with certain reactions. And then I just wait. And so it's just preparing. You don't know what's going to happen, but you prepare for different scenarios and you take positions accordingly. Gerard says he feels like I don't have a TP target for my longs, only hedges against my longs. I certainly have kind of general targets, but I'm willing to let price action play out a bit and take hedges at resistance, because what I would rather do, like say we get something like this, maybe I get a TP1, stop to entry, and we come up and impulse through this high. Well, that's a really nice reaction off a key level, a really great short trigger. Because anything can happen, I don't want to get in a position where I just close out all my longs. There's a nice reaction, but there's actually still no weakness on ETH. And then I don't want to be in a position where I've closed out all my longs and then this happens and I'm struggling to get back into that position. I'm okay to take hedge shorts, which is kind of capturing that profit on the longs with the reward, with the benefit of if we break out, my shorts get stopped out, well, my longs just carry. And really wait for some more clear structural weakness to consider closing out those longs and understanding that I'm protected by my hedge shorts. Brains is asking, do you ever take a setup for a scalp, for example, like this ETH short, and then you start seeing very low time frame price action that makes you want to close your trade before your stop loss gets hit? I think that's a very dangerous game to play with scalps, because a very low time frame scalp, what really can happen here that would make me want to close out my trade, right? Like almost nothing matters. You have the reaction, you have bearish absorption, you know, maybe price does this. It's like, oh, we bounced off this. I want to close my scalp completely. what's your target? Yeah, I think there are certain occasions where I'll close out a trade early because it's just very, like maybe we've started ranging for 3 hours after I've entered this idea, and there's just massive bullish absorption here, and tons of shorts opening and big reactions. It's like, I'm gonna close this early, because, but it's a dangerous game to play, because what you end up doing is you enter in trades, you have an idea, and then you sit there watching the 1 minute chart, and every green candle you're sitting there thinking about closing your position. And you'll just sit there, do that with all your trades, always looking for an excuse to get out early. So I think generally I find it's better to let your trade ideas play out. I took that short. I'm happy to sit in it, to hit some targets. But of course, anything can happen. But we'll see. But some of you know I often like to treat the first leg of my trade as a scalp. So I'm always looking to lock in that TP1, and I can let the rest run with the stop to entry. There are certain occasions where I'll hold a bigger position for longer, but locking in that TP1 should not be disregarded. It's consistently taking profits off your trades, removing risk is psychologically, it's a great way to trade, and it adds up. Yeah, I think so. Jonathan says, if you weren't hedging right now, would you take this trade as a normal one? Yeah, I think this is a reasonable short with the bearish absorption. Typically, my hedges are structured around trades I would take either way. Yash is asking, do you wait for a market structure break when hedging short? Not always. The thing about my perspective on the market is the best time to take a short, like if you're in a range. Oh, the best time to take a short is something like this, the sweep of the range highs, the rejection. I want my short from the highs of the range. And you don't necessarily have a market structure break yet, but you have a really nice reaction on high volume. The best time to take a long, and this is one I took, is a sweep of the range lows, reclaim. That's a very nice long trigger with nice tight invalidation. So I'm not necessarily looking for that break in market structure on a specific time frame. Now, of course, you can use market structure breaks on a low time frame to trigger these setups. So maybe you say, well, we're in a clear downtrend here. Maybe I'm going to let the reclaim happen and let this market structure break come into play before I take a long, something on a lower time frame. But these are all defined ideas for me. When typically, if I'm looking to take a long at the sweep of the lows of a range, like say this one on Bitcoin, I did take as well. That's prepared up here. I'm waiting for it. If we get a nice reaction, we got a nice retest. I'm not necessarily waiting for that market structure break. I'm envisioning a range here and trading it accordingly. Also, I long this retracement on Bitcoin as well over the Easter weekend. DXY, this is an idea I've had from up here. Even as we were pushing up here, I kind of envisioned, this is on the daily chart, sweeping this high. And I would very much like to come down and tap this channel and see what the reaction's like there. A reaction's one thing. A clear sign of strength would be reclaiming these lows. And if that coincides with some nice short setups on Bitcoin, I'll be taking that into consideration. But yeah, I'm perfectly happy to get stopped out of this short if that's the case. Maybe reevaluate a short idea if we do come up and sweep these highs. Yash is asking, do you use a strict risk percentage risk, or does it depend on it setup? Any advice to grow a smaller account? Personally, I think trading a smaller account should be done just like you trade a bigger account. You need to go anywhere with trading, you need to implement strict risk management. The size of your account doesn't change the math of why risk management is important. You know, I think running 1 to 2% risk maximum is a key idea, usually giving your trades room to breathe. But yeah, I think strict risk management based on percentages is usually the way to go. You know, it's a slippery slope to weight different setups. Like, this is a really good setup, so I'm going to trade, instead of risking 1%, I'm going to risk 5%. But the problem is, although there's some logic behind that, is if you're not incredibly experienced and aware of your psychology, you'll start taking that higher risk profile trade more often, because you're always looking for an excuse based on greed and fear to take a bigger position, saying, you know, I think this one's great, I'm going to risk 5%, or, well, I just lost 2 5% trades, so I need to take this next trade with higher risk to make up for those losses. And it's a slippery slope weighing your setups differently. Someone's asking, I'll answer a few questions here. Well, first, how do you feel about bullish/bearish wicks? If I understand the question correctly, like a quick wick rejection, I think those are always worth considering. You know, it's uncommon when price rejects to see these quick wicks at support or quick wicks at resistance. So you definitely want to consider these wicks as a potential bearish or bullish sign. But there was another question. Where was it? Someone asked, how do I make a decision on leverage? Leverage is a tool I use to reduce the amount of capital I need to hold on an exchange at one time. So I would say for most people, touching leverage is a bad idea if you don't completely understand the concepts behind it. But it's not a tool to trade more money than you have. It's a tool like to avoid the FTX type situations where all your funds are on an exchange. You can leverage allows you to put a smaller amount of your funds on an exchange, but still trade with size and remove and add funds as needed. Because there's a risk, right? An exchange risk to having all your funds on an exchange. You have an FTX situation and you lose everything. So it just limits the amount of money that you're putting at risk. Let me just say this, like if you're brand new to trading and the concepts of risk management and whatever, you really want to explore these ideas with a paper trading account. That's trading fake money, and deploy these concepts over a larger series of trades and really see what the outcome is for you as you're learning. So somebody asks, would you say risk 1 to 2% of the account size or the position size? So the way that when I speak about risking 1% would be, let's say I have a $10,000 account and my stop loss is let's say it's 1% away. That means I can take a $10,000 position. If my stop gets hit, I lose 1% of my account because my stop loss is 1% away. If it's 0.5% away, which I would just say for the vast majority of traders who aren't very, very well equipped, unless you're very experienced, you should not be running sub 1% stops because your entries aren't going to be very clean. Your invalidation isn't going to be very clean. You'll end up just getting stopped off tons of positions you shouldn't be. But if it is 0.5% away, then you can take a $20,000 position on a $10,000 account and your risk is still 1%, right? But using a tighter stop loss just to increase your size, to increase the potential risk reward of a trade, sounds like a great idea. But your stop loss needs to be a technically valid stop loss first. So, for me, that's structure. What actually invalidates the trade? So for me, what invalidates this short? Well, is taking this high. And if we break out, I certainly want out of that short, right? Because there's different short setups higher based off of a reaction. If we don't get a reaction, I don't want to just be sitting in a short. But if we do get a nice reaction and we swing failure the highs, then hey, I'm willing to re-enter short with a new invalidation. And for me, I'd rather just get stopped out and reevaluate than I would sit in a short till much higher with no signs of weakness. But I'm comfortable doing that. I understand no matter how many, if I win 20 trades in a row, it doesn't matter. I don't know what's going to happen next. I always need to deploy risk management, invalidation, and just trade reasonably. You can't win every trade. And the moment you stop using a stop loss and trying to win every trade is going to usually turn into a disaster. Fernando is asking, how much of your position do you close on your hedges at TP1? It depends on the situation. It depends if it's a swing. It depends if it's a scalp. Oftentimes I'm scalping at TP1 and then I am looking to add back to my position. So like a good example is, although I'm swing long off of a lot of ideas on ETH all the way up here on the 1 hour chart, I'm taking profits on those. Like I took profits, I'm taking profits and then I'm adding back. I'm taking profits, I'm adding back. And because I know that that's how I'm going to approach the position, I could close, a third of the position on a TP1, half the position on a TP1. I could be 75% out of a position. Like I was 75% out of longs up here on Bitcoin, but I also knew I would have I knew I would have opportunities to add back, but I was willing to look for opportunities to add back. So yeah, I think it just depends. But I think for most people, half your position at a TP1 might feel aggressive, but it's not unreasonable. There's always opportunities to get back into positions. Somebody asking about ARB, if I could look at it. I looked at it earlier in the live stream. We have a swing failure. We have a back test. Certainly reasonable short setup here. I wouldn't mind waiting for, like if I got something like this would even be a nicer short setup. But might not get that. I'm just not trading a ton of different stuff. Well, I can't really pay attention to what I'm doing on live stream. Yeah, somebody's saying ADA looking strong. I do want to point out, because I had an ADA alert go off. This is an idea I talked about, I think in a public live stream some time ago. When we were down here, yeah. Anyways, before this breakout, I said I wouldn't be surprised to see us. You know, there's a really nice Elliott wave kind of idea here where we come up and sweep this high into the 123.7, and we have something like an A. Well, this is just an idea. I'm not predicting what's going to happen or anything. It's just an idea. You would think I would. What am I doing? Where you have something like an A, B, C into the 123.7, and you could actually see a retracement. There's different there's running flats, expanded flats, etc. But something like this would actually be beautiful down into this 20-cent region as an expanded flat. So I'm actually interested in shorting a sweep of this high on Cardano into the 123.7. That's an idea I talked about. I don't know when. It must have been a couple weeks ago in a live stream. So you can see I have alerts set here. Being patient for that high to be swept, because I really like this. This looks like a corrective structure to me. It does not look like an impulsive structure. You know, when you're looking at these flats, you want to see this really, you want to see these really clear three-wave structures, and you can kind of imagine this being one. So I don't know. We'll see. I think this was the 786 as well on this A. No, it was the golden pocket. Obviously, you can kind of tell that's not 786. But KGS is saying, asking again, sorry if I missed the first question. He said, I'm a very slow learner and I find applying concepts quite difficult. Would you recommend I join the Learner's Ape or Advanced group? From what I see, there's more info on the Advanced. Basically, the difference is, and I think there's a huge educational value to it, is along with the core educational videos, there's live market updates. So it's not unreasonable to say, hey, I want to take some time to learn, go through all that content before I'm getting live updates on concepts I haven't learned. But I think the reason I do all those live updates is because of the educational value as well. So I think most people get a lot of value out of those, because it really just crystallizes those concepts. You're seeing them every day implemented. So. Kevin's asking, do you consider bullish bearish to be invalidated if the pivot low / high is swept? It depends. You know, if you have you have to remember what CVD is telling you. I'm assuming you're talking about absorption. So if you see an increase in cumulative volume delta, positive delta of $100 million on Bitcoin between the two highs. So let's just say you have a cumulative volume delta increase. I'm just going to create a fictional scenario here with a 5-minute chart. Say you see a cumulative volume delta, a positive increase of 100 million between this high and this high. We didn't see that, but price wicks through the high. Does it really make sense to say that bearish absorption is invalidated? Because what you're going to see on the CVD line, while price is making an equal high, barely wicking through it and then rejecting, you're going to see CVD having done something like this. And does it really make sense to invalidate? And maybe you have that 100 million increase in delta, cumulative volume delta there. So does it really make sense to say that bearish absorption is invalidated because we wicked 0.01% through the high or 1%? So you want to factor in the degree of the divergence as well. And just think about it as, what is the information telling you? It's telling you the longs and the shorts the selling and the buying pressure coming in at market. And so you don't want to get too specific about, oh, price made a higher high, all bearish absorption is invalidated, or price made a lower low, all bullish absorption is invalidated, if you just wick through and take that liquidity. So I hope that makes sense. Yalko VZ, it's been a fun journey. He said, joining the LATF for reals changed my life and my view on the market. Yeah, I feel a little bit, I understand people's skepticism about joining quote unquote paid groups or whatever it is, because I think there's a lot of things that give them a bad name, a lot of groups that give them a bad name. But the concept of a group of people is a very varying concept, right? Groups of people formed to accomplish things of many different sorts. And because one group does something doesn't make all groups bad. Because one group does something good doesn't make all groups good. But there's just been an overwhelming positive result and response from the people in the LATF. I really enjoy what we're doing there, and I'm honored to have produced value for people. So, and it's a long road. I'm in there every day with everybody as well, and major breakthroughs in this game are not something that come every day, and it takes a while to make progress. So but yeah, I'll answer a few more questions. I might wrap up this live stream. Certainly will be updating in the Discord, but I'm in a scalp short here on ETH. I certainly wouldn't mind something like this either, but not closing my longs until there's some clear structural weakness. And that served me well, this whole move up. Because yes, we had local rejections. There maybe even could have been some scalp short ideas, although a little difficult. I'm not closing my longs off these reactions. Certainly expecting this high to be taken. Someone's saying, can you explain entry based on invalidation? So let's say we're in a range. At range lows trading on 1 hour time frame. What do you wait for the 1 hourly candle close back inside the range? It again depends. It depends on the type of reaction that we're getting. Something I really like to see when I'm taking a position is I like to see these huge high volume spikes, right? So I did wait for a 4 hour close here and long to run here, but I'm noting this really high volume spike as we grab this liquidity. We kind of sweep this low. We had an ascending channel here as well at the time. So sometimes I take the position really aggressively off the reaction. Sometimes I wait for price to consolidate a little bit. But invalidation is based on the structure of your trade. So not all invalidation is the same, right? Like a swing failure is a specific setup with a specific invalidation. If you're trading an ascending or descending channel, your invalidation is going to be different based on structure. Typical Ice Cold's asking, how do I determine which coins I'm going to trade? Is it purely set up? Do you have a scanner you use? I'm typically focused on Bitcoin and ETH. I'm always looking at those. I get a lot of requests for different altcoins, so I'm always looking at different altcoins. If I see setups I like, I trade them, but I'm always focused on Bitcoin and ETH, and then obviously I end up charting many dozens of different altcoins just because that's what I do. And so I'm always, like for example, ADA, it's not that I've done some massive amount of work to decide if that I want to short ADA up here in the sense of a scanner, looking at the market, looking at what's maybe pumping the most. I simply have this set up from weeks ago based on a live stream request and me analyzing ADA. Set an alert and wait for it. Weeks go by. It's like, oh, this setup's coming up. I might be interested in that. Well, you can see here, Brains, you're asking if ETH sweeps the local low, would I close the setup or just wait for the stop loss to get hit? I'm assuming you mean this low. Well, I have a TP1 idea there. Close it, stop to entry, whatever. Yeah. All right. Well, I appreciate everyone tuning in. You know, one thing that's really important is, and it can be very difficult, is it's one thing to find a position. It's one thing to get along before this move on ETH and be sitting in longs. It's another thing to hold it, and it can be really stressful if you're sitting there price watching every pullback on the 1 minute chart thinking, oh, I got to get out my long. You zoom out, there's nothing bearish here. There's barely, I mean, there's not even a lower low on the 5 minute chart. No reason to close that position. So, yeah, just always kind of remember that you don't get paid for entering a position. You get paid for holding a position. A very little amount of your time as a trader might be spent opening positions and closing positions, because if you don't wait for the position to play out, you'll never make money, right? And sitting watching the 1 minute chart can be a really unpleasant thing to do, especially as a new trader. And that's also why I like to give updates along the progression of a move, like as we're consolidating here, saying, hey, this all looks very bullish from an order flow perspective. I know we're at the range highs, but I'm just still sitting long. There's no reason to be closing my long here and get the impulse, still holding my long, looking for this level, you know, so on. Yeah, but guys, there's so much. I'll say this: there's so much to learn about trading and trading psychology, technical analysis, all those things. If it's something you're interested in, I think the LITF is a great place. But just understand that it's not you click sign up and then all of a sudden magically you're a profitable trader. There's work that needs to be put in, and I have so much admiration and respect for the members who really are putting in the work every day. You know, people are sharing, taking their own setups. There's people who have developed kind of their own systems, maybe utilizing some of these concepts, but they're trading their own style. They're trading towards their own strengths and personality. And yeah, it's just an environment for people to learn and grow. And nobody has all the answers. Simply about applying, you know, a lot of it's about applying general ideas, things like risk management, invalidation, you know, certainly order flow, many people are incorporating into their ideas, but there's no right or wrong way to trade in a general sense. Of course, there are wrong ways to trade, but there's no one technical system that is quote unquote the best or the way you have to trade. There's, you know, I'm not a breakout trader. Plenty of people are. There's technical, proper ways to do that it works from a mathematical perspective. So, you know, finding a system or style that suits you is its own journey, right? But whether or not, you know, the style that I trade would suit you, I think there's a lot of value in being a part of a community where everybody's working towards the same goals. Yeah, and I'll touch on this because Brains is saying, you know, he's not having a lot of success being profitable because of the mentality of trading. I would say, and the psychological, emotional things, I would say that's the biggest hurdle for almost every trader. At the end of the day, yes, you do need a technical system with an edge. You need to understand all these kind of fundamental things, but your biggest opponent in trading is yourself. And I think probably a larger percentage of trading is about emotional and psychological development than it is about learning technical systems. Because what you'll find is over and over again, you'll have technical ideas, you'll have setups, and you'll say, I'm waiting for this. And whether either you'll find that, you know, you were waiting for this whatever it is, this setup to take a long, or this setup to take a long, and you've been waiting patiently for it, and when it comes, you find yourself for some reason shorting because you're like, you know what, I have this plan, this does not look good. I just saw on Twitter that $5 trillion of ETH is being released. I'm just going to short this. And then price starts pumping and you think my stop loss is here, but it starts going up. You're like, I don't want to get stopped out. This is obviously a fake out. You start removing your stop loss. And then in hindsight, you look and you say, wow, my plan was to long here. Somehow I shorted. I took off my stop loss. And you'll find yourself doing things like that. Or you'll get in a long. Price will start going up and you'll start staring at the 1 minute chart. Maybe your target is $2,000. Start staring at the 1 minute chart and you'll think, wow, this looks so bearish. There's no way we're going to 2K. We've swept these highs. I'm closing my entire long. And then price just impulses up. So it's one thing to have a technical plan, technical ideas, but you really need to develop your emotional and psychological impulses, because without doing that, it's going to be really hard to trade well. And that only comes with experience and understanding yourself, right? So, there's no quick and easy answer. There's no quick and easy way. You got to put in the work. You got to put in the time. You got to conquer yourself. See, I want to say this, and because I'm getting a few questions like this, is these are, to me, and I could be misinterpreting this, but I've gotten questions like someone just asked, would you consider closing your short early on ETH if we get bullish absorption here? To me, these are trade-specific questions about a trade I just opened now a couple minutes ago. Prices reacting, right? We're coming down. These are, to me, feel like fear-based questions. It feels like, you're in a position and you're sitting here thinking like, you're almost just thinking, how do I get out of this position? It's in slight profits. You're starting to plan your way out of this trade. For me, I'm in longs from all the way down here. I could give two shits if I get stopped out of this position. I'm not even thinking about closing it. And what I'm saying is, like say we see some local bullish absorption between these lows and you're like, I got to get out of this long short. I would just say this. If you're a brand new trader, for one, you should be trading with a paper trading account, but almost with few exceptions, there is never a reason. For me personally, there are very few reasons to be getting out of a trade I just opened on the 1 minute time frame, because I'm seeing something. I'm looking at a candle. I'm thinking, oh shit, this is bad for my short. I got to get out. It's like I do not care about anything that's happening here. I'll either get stopped out or I won't. But yeah. So I just would say that, you have a potential range idea, an initial reactions forming. Anything can happen here, but I'm not trying to escape this setup, looking for some reason to close it. And so I think the danger is when you get like those questions where people ask, would you close your short here? Would you close it here? Would you close it off this reaction? Would you close it because there's bullish absorption between these lows? It becomes very dangerous. You're almost setting yourself up to become a manic trader who every trade they enter, they're staring at the 1 minute chart, just looking for a reason to get out or flip their trade. And so I would say this, the reason I would say most of the time, certainly not, is it's not uncommon for me to open a position and just stop. I don't even look at the chart. I don't care. I'll set alerts. I'll maybe set my TP targets. I have a stop loss. I have targets. I'm not staring at the 1 minute chart trying to decide if I should get out of a position or not, typically. Well, yeah, do I consider bullish or bearish absorption when getting in or out of a position? If you've been a member of the LITF for a while, of course I do, because I reference it almost every single time I enter a position. It's certainly something to consider, right? I'm always watching order flow. But I think it's dangerous to watch really low time frame right after entering a position, watching really low time frame price action, whether long or short, to try to make the decision of, oh, I'm long, should I get out? Or, down here, obviously we came back down to retest at this level. This is the 1 minute time frame. It can get really questionable to start watching these 1 minute candles or low time frame candles or divergences. But yeah, obviously if we come down and there's this massive bullish absorption as we come and sweep these lows, then that's going to really, and we reclaim them, that's going to inform a TP decision for sure. But yeah, I appreciate, like I said, everybody tuning in, and I'm not being critical, so don't take it personal when I say those things in that way. I'm trying to be careful how I answer, because I could just say, oh yeah, I absolutely consider, if someone asked, do you consider low time frame when deciding to get out of a position early or close a position or take profits? If I just say yes, absolutely, and it's not nuanced, and I'm not very hard on the things I think are a danger, then it can get really misconstrued, right? Where, even this, like if we come and reclaim this low, do I really want to close this short on something like that? Not really. But yeah. And, I trade with decent size too, so it's not necessarily, it's not necessarily that there's no there's nothing that would trigger me to make an emotional decision. It's just you have to develop tools in your own psychology to overcome those, right? It's like I've said this before, it's not that you have to have zero emotions when trading, but you have to be so in tune with your technical system and the actual reasons why you make decisions that you're not making decisions based off of those emotions. So I would say it's okay to feel excited when a trade's going in your favor. Because that's natural. It's okay to feel concerned or disconcerted or uncomfortable when a trade's moving against you and is going to hit your stop loss. But you just have to understand that feeling the emotions is one thing. Acting on them is another thing. Yeah, and it's very common. I'm going to wrap up this live stream right away, but Brian's saying, I think you answered the question perfectly and honestly described what I tend to do a lot, and I'm realizing it's very dangerous and manic. And it sort of creates a bad feedback loop, because sometimes it works and you're like, oh, I'm glad I got out of that position. Sometimes it doesn't, but you're always looking for a way out of positions, and your winners can never run because of it. And it's very common. That's why I'm talking about it. It's not a rare thing. It's not something that, only a few traders deal with. It's a very common thing to constantly be looking for ways out of positions. And it's not that low time frame price structure doesn't matter and can't be used as a TP1, but if you're looking at this and you think, okay, if we sweep this low, I'm out of this long, and then you close your long or short, sorry, and then you close and this happens. It's kind of like, does it really make sense to be watching really the 10-second time frame and closing a short up here? Not really. But anyways, I really appreciate everybody tuning in. I hope you got value out of this live stream. Yeah, and I'm gonna carry on with my evening here. It's getting a little late. So I'll talk to you all later. Thanks for all the questions. And I hope that my responses didn't ever feel too harsh, or because they're not meant to be. I'm not harping on the question. I'm not judging the question. I'm really trying to hone in on the point, right? So I actually appreciate those questions, and you know, I don't know everything either. I have my own opinions, but yeah, and you know, a nice setup here. I think explained well here with this short idea. So, yeah, just really think about what you're doing and why. Using risk management is super important because it helps you think more clearly. But I think, you know, what's worth watching here on ETH is, are we reacting here? If we're just breaking down, certainly just want to carry that short, right? Are we reclaiming the range? Is there bullish absorption? That sort of thing. Then might hit a TP1 on that short. All right, everyone. Thanks for tuning in. I'll certainly be giving updates in the Discord. I appreciate you all.